Hello viewers, my name is Mr. Jacobs from John Baziga Senior Secondary School in the BCM district. Welcome to the ECDOE broadcast studio. Today's lesson is about budgets, which is in paper 2. I will be covering 3 subtopics back to back for your full understanding. Okay, let us go into our lesson for today. Before we can start with any lesson, boys and girls, we first have to see what is being discussed or stated in our examination guideline. The examination guideline that we're using for accounting is the 2021 examination guideline, and it clearly states here that when it comes to budget, we must be able to analyze and interpret cash budgets for sole traders and for companies, analyze an interpretation of projected income statement for sole traders and for companies. Now, it's also important for us to understand that this question of budgets can be asked in different ways. You might be asked to do a debtors collection schedule in the question paper, which is going to be now in the trial paper or at the end of the year's paper. You might even be asked to do a creditors payment schedule. You can be asked to complete calculations of unknown figures in a cash budget. Also, you might be asked to compare the difference between a cash budget as well as a projected income statement. Also, you might be asked to indicate whether certain expenses were well controlled by the business or not. For example, we talk about advertising. Was the advertising well controlled? You can't just say yes or no. You must be able to prove it by checking it against the sales figures that we have and working out a percentage for either for the increase or for the decrease. Why is cash budgets important? We also need to know that for a business in general. It states here, a cash budget is an important tool used to plan as well as to monitor cash flows of the business. A business needs to make sure that they control the money coming in and out of the business, because we don't want to be in a situation where we don't have enough money to pay for important expenses. Also, the management, the people who are running the business, can check whether the business will have enough money to pay their creditors, to buy their stock, or to purchase fixed assets, or even pay their expenses. Because if they know they will not have enough money, then they can plan to see where they can get funds from to be able to cover these payments. Also, budgets as will assist the business to predict, anticipate any shortfall or deficit that they might have, and arrange with the banks accordingly for an overdraft or for loans to make up for that deficit that they might have. Also, budgeting improves decision-making for the business. When I say decision-making, they may use the information in the budget to create informed decisions. And also, many people who invest in a company will ask you to provide a budget in addition to a business plan, especially if it is a new business. Also, when we're drafting a budget as a business, we need to consider the following things. The budget that we are drafting, it must be achievable. You can't draft a budget for R1 million if you know you're a small business that might only have 50,000 rand. And it must be realistic. Budget payments shouldn't be more than your receipts, because if it is more than the receipts, you will definitely have a shortfall. After the budget period, the budgeted receipts that we have, meaning the money coming in, and payments must be compared to see whether we are in our budget. Therefore, we also draft our actual figures and do a comparison. And if the actual figures are more than the budget figures, we must figure out why are they more, or if they are less, then we must also figure out and investigate why are they less. If actual figures are more or less than the budgeted figures, then we have to investigate, and there needs to be a reason why there is this difference or variance. A budget also needs to be revised if under budgeted or over budgeted. Now, items that are affecting the cash budget. When we look at our inflow of money, our receipts, it will be our cash sales, because a cash sale means the money you get immediately from the customer. So that will be a direct inflow of money into the business. Also, receipts from debtors when they agree to pay us at a certain time, it will also be an inflow of money on a monthly basis. Rent income, monthly income or inflow of money coming into the business, interest income as well for any type of investment that we might have. It can be from the bank, it can be from a fixed deposit, savings account, etc. When a fixed deposit matures, so if we have made the investment and the investment matures after a couple of months, then that amount of money that's coming in is also called a receipt. Cash sale of fixed assets as well as a loan that we might have made, so the money coming into the business will then also be a receipt. Now the next items that will then decrease our inflows will be our outflows, our payments. Cash purchase of stock for the business will be an outflow of money. Cash purchase of fixed assets as well will be an outflow of money. Any type of expense that we have to pay cash as well will be an outflow of money. For example, when we buy stationery, pay for salaries, etc., it will be considered a payment, not an expense. Cash drawings by the owner. Now be very careful here. Cash drawings, only the money that the owner is taking directly from the business will be an outflow of money, a payment. But if the owner takes stock, we will not include it in our cash budget because it's a non-cash item. Also, if the company decides to invest more money in a fixed deposit, a savings account, and they use the actual cash money, then that will be an outflow of money. If they are paying back the loan and the interest on any type of loan or any interest expense, it will then be a payment. Now, also we need to take note of the following important concepts that you will come across a lot in your budgets question. Things such as the word cash budget. You also need to know what is a cash budget, because you might be asked a short question in the exam of that. It states that it deals with the expected inflow and outflow of cash. You can't tell me as a description in the question paper that it deals with incomes and expenses, then you're going to be wrong, because an income can be generated but a payment might be received only later. Here we are only dealing with actual money coming in and actual money going out. What is the reason or the purpose for this cash budget? To project or to estimate, project or estimate the future receipts, again, inflow of money as well as payments. Then another term you might come across in the paper will be the term projected income statement or projected statement of comprehensive income. It states it's a budget that deals with, see the difference here, expected incomes, not receipts, right? And expenses, not payments. The reason why we draft in this projected income statement is to estimate future profits of the business as well as future losses, not whether we have a surplus or a deficit in our bank account. Debtors collection schedule. Why do we do it? Or what is a debtors collection schedule rather? To calculate the expected collections, the money that we get from our debtors, because when they buy on credit, they have to pay the money back. To estimate our receipts from that we expect from our debtors. That's the reason why we do a debtors collection schedule. Creditors payment schedule, it states it's a plan of how the business will pay its creditors back, and to estimate payments to be made to creditors in the future, because again, when we buy from them on credit, we have to pay them back the amount of money that we owing them. And the last item will be internal control. It states it provides the management, the people running the business, with a tool to monitor and control business activities for internal control reasons or purposes, used by management to ensure that future plans are followed by the business. Now, another popular question that comes across in the exam is to differentiate between a cash budget and a projected income statement. And the only way you can show the difference is by indicating what accounts will you only find in the cash budget and what accounts will you only find in the projected income statement. The accounts you will only find in the cash budget will be receipts from debtors, payments to creditors, purchase of fixed assets, loan repayments, loan received. All of these items has to do with money coming in and money going out of the business. However, on the projected income statement now, you will see terms such as cost of sales, which you will never come across in a cash budget. Profit or loss, whether it's a gross profit, a net profit, operating profit or loss, will only be in our projected income statement, but not in our cash budget. Depreciation will only be in our projected income statement because, as we know, grade 12s, the depreciation is a non-cash item. It will never reflect in our cash budget. Loss on sale of asset as well will only be in our projected income statement. Discounts, whether it's received or allowed, will never be in our cash budget, but only in our projected income statement. Any form of bad debts, provision for bad debts, adjustment as well, will only be in our projected income statement. Now, it's also important for us to know how do we actually create or draft a monthly projected income statement. You might be asked to do a projected income statement for 3 months or for a month. But for you to be able to draft that new one, you need to use the previous year's information. They will give you normally a financial statement for the previous year, or an income statement for the previous year, or a statement of comprehensive income for the previous year. You will use that figures as they are and divide them by 12 to get a monthly figure. Now, once you have those figures, you will then look at the additional information given to you, where they might indicate to you that a certain payment or expense rather will either increase or decrease by a certain amount or by a certain percentage. Then you will have to make the change for the new projected income statement. Also, any type of sales might increase or decrease. Then they might give you a figure or a percentage. You use that figure as it is or percentage to then bring the change for the projected income statement into account. Also, if there's any expected growth when it comes to gross profit, for example, if they might indicate to you that the gross profit percentage or markup percentage on cost of sales will increase with a certain percentage or decrease, then you will affect that change to your sales or cost of sales figures. Also, if there's any type of increased demand for goods, for example, if it's in December or certain seasons during the winter, for example, or summer, and they might indicate to you that the sales will either increase or decrease due to that particular month or quarter, then you bring that change also into account. And also, very important note that you will never find any assets, owner's equity, and liability accounts, meaning statement of financial position accounts, in your projected income statement. Also, another very popular question that they ask in budgets is a variance between budgeted and actual figures. Now here, management will use this existing information to monitor and control the business's operations day-to-day running. This process involves, again, comparing of what we have planned to spend or receive, meaning budgeted figures, with the actual figures that came in, right? The actual payments, the actual incomes or receipts. The difference between the actual and budget amounts will be referred to as a variance or a difference. Now, also, they might give you a variance analysis report where they give you the actual figures for a month with the budgeted figures. Now, this report identifies the gaps or the difference between the budgeted and actual figures. The report will also provide an explanation or a reason or advice on the future course of action. The variance may be negative, maybe meaning unfavorable or adverse, or it can be positive, meaning favorable, depending on the type of transaction or the nature of transaction. Positive means it's better than what we anticipated or planned for. Negative can mean it is worse than what we have expected. Now, information to be considered when analyzing the variance between budgeted and actual figures when it comes to our payments. When it's a favorable variance, the actual figures are less than the budgeted figures. But on the opposite side, the negative or the unfavorable variance, actual figures or actual payments are more than what we have budgeted. For example, if you look at the telephone account, when we look at the negative or unfavorable variance, if we have planned to spend 1,000 rand a month on telephone expenses, but now we've spent 2,000 rand a month, then we need to investigate the reason for that negative variance. It could mean that workers were misusing the telephone, or it could mean that workers have used the telephone in a favorable way to increase our sales. When it comes to our incomes or our receipts, when it's a favorable variance, the opposite happens. The actual figure is more than what we have budgeted for. But now a negative or unfavorable variance can mean that the actual figures is less than what we have budgeted. Let us say, for example, you plan to generate R1 million of sales. But then now when you look at your actual sales, you only have 800,000. That will be considered a negative variance. You need to find out why that our sales decreased from R1 million to 800,000 rand. It's also useful, grade 12, to study the following words and use them correctly during analysis and interpretation of a budget. Key words that you must always use in your explanation will be the words over budgeted or underspent, as well as under budgeted and overspent. What do I mean when I say over budgeted or underspent? You budgeted too high, or you underspent because you did not use the necessary budgeted money as it should have been. For example, if we planned to spend 1,000 rand on maintenance, but we didn't spend anything on it actually, then it means what did we do? We underspent, or rather over budgeted. But when we talk about under budgeted, it means here you overspend due to a lack of planning or unforeseen breakages, and your budgeted allocation of the money was not done correctly or misused. For example, the telephone account was too high, then it means you have under budgeted, meaning your budget was, for example, 1,000 rand, but you actually spent 1,500 rand, then it means you under budgeted or you have overspent. This could be the possible reason for the variance between the budgeted amount and the actual amount. Let's look at an example, grade 12s. This example came from last year's paper, end of the year, November 2024. It was the paper 2 paper of the national exams. Here it was in question 3, it was asked as a budget question. It states here by question 3.1, show the amount for the transactions below in the appropriate columns for the cash budget and the projected statement of comprehensive income for the month of December 2024 in the answer book. Now here they've given you an example, and the example normally guides you on how the question should be answered. The example states here monthly insurance premium for the month of December 2024, 5,000 rand will be paid. Let us look here at how we're supposed to have answered this question. You will see here's the example. There is the cash budget part, and then here is the projected statement of comprehensive income. You will notice there is a receipt payment column in our cash budget, and there's an income and expense column in our projected statement of comprehensive income. Now, when we look at the example again, you were told here it is for insurance. The payment will be made in December, and the amount is 5,000 rand. We are asked to do the budget as well as the statement of comprehensive income for the month of December. That means the actual 5,000 rand for insurance is considered a payment because it is paid in December. And then also, it is also considered an expense in our statement of comprehensive income. And when we look at our next transactions, 3.1.1, it states here, the expected cash sales, very important, grade 12, cash sales for December 2024 was an amount of 132,000. The cost of sales was 101,000. Now the cash sales will then go as a receipt because it's not credit sales, it's cash sales. Therefore, it goes as a receipt in the cash budget. It's also a what? A income, because remember, sales in general is considered an income whether it's cash or credit sales. However, very important, the cost of sales does not go into our cash budget, as I said earlier on. It will only be in our projected statement of comprehensive income. Hence, the 101 will be then here as an expense. Now, other learners could have had the difference between the two, which would have been the profit. Now, if you have done that, it means you were supposed to take the 132, subtract the 101, then you would get the 31,000 Rand, which will then be the profit, which will go into the income column. 3.1.2, drawings by the owner. Drawings by the owner, budgeted for December, was an amount of 40,000 Rand. This includes 34 cash and the remainder for merchandise. Merchandise meaning stock. Now, when we do it in our cash budget, the cash drawings of 34 will be under payments. But now remember, drawings will never be in our statement of comprehensive income. That is considered the owner's equity account, so it has to go into our statement of financial position. Then the next one, 3.1.3, a fixed deposit of 245,000 will mature on the 31st of December 2024. A direct deposit, meaning the money will be paid into our bank account to the value of 264,600, which includes the interest, will be made into our current bank account for the business on this date. Interest is not capitalized. Okay, so how do we deal with that transaction? The entire amount, including the interest, is considered a receipt. But now when it comes to our projected statement of comprehensive income, we can only record our what? Our profit here, because the 245,000 is considered a what? A current asset. Hence, that part will go to our statement of financial position. But the profit here, which is the difference between 264,600 and the amount of 245,000, will then be our interest, and that interest here will then go as an income in our projected statement of comprehensive income. Let us look at a few more examples from the same paper. 3.2.1a, you were asked to calculate the credit purchases for November 2024 for 4 marks. Okay? So there's certain information that you need. The information that was necessary for you to calculate this information was that the total sales for cash, or 60% rather, the total sales is cash. Goods are sold at a markup of 25% on cost. And then also another important term is the part where it states trading stock on hand is maintained through monthly purchases, meaning once the stock is used up, we are replacing it basically. And the business buys all their stock on credit only. So you were asked to calculate the what? The credit purchases for the month of November. Okay? And then there's more important information. In our cash budget, we were given our cash sales for the month of November. Okay? Remember, you were told that 60% of the total sales is cash sales. Therefore, you will have to take that 103 that you will see here. You work out what is the total sales, meaning 100% of it. Therefore, you'll have to say 100 over 60, because the 60 goes at the bottom of the fraction, because the 60 represent the cash sales. Then you will multiply it by 100 over 125, because the 125 is the part where is the cost plus the markup. What are we looking for? We are looking for the entire cost. Therefore, the entire cost will then also be considered the total purchases, because we are also told that the business buys all their goods on credit. There were no cash purchases. Okay. Next question. You are asked here to complete the creditors payment schedule for the month of December 2024 for 5 marks. States your creditors are paid as follows: 75% in the month, very important, after the date of purchase. So we buy this month, we then pay them the following month. And if we do that, the supplier gives us a 3% discount for paying the 75% of the purchase. The balance also, it states here, is paid in the month thereafter. So the 25%, meaning 100% minus the 75 that we see here, will be this balance that they are referring to here. That amount is then paid in the month thereafter. Now here you were given pre-populated information, meaning in the actual creditors payment schedule for December, you were given the months September, October, November. You were also already given the credit purchases for the month of September, for the month of October, but this figure was not there. This figure is coming from the previous answer we've calculated here, the 137,600. Hence, here you will notice there's something called a method mark that was given to you there. Then, in the answer book as well, this figure of 36,800 was already calculated. The 96,612 was already calculated. And for you to make double sure that there must be no figure here, you just go and add these two figures together. If you add them together, you should get the 133,412 at the bottom. Now, what we also need to know is how are our creditors being paid. Like we saw earlier on, you were told that 75% is paid in the month after the date of the purchase, and then the remainder is then paid the month after that payment. Therefore, you will notice here in September, the month after September would have been October. That would have been the 75%. But we don't have October here, right? We only have November and December in our schedule. Therefore, October was already paid. So then this 36 that we see here is the remaining 25%, which is paid in November, meaning there's no other payment that would happen after November. Hence, here you will notice something called superfluous entry. If there was any figure that you have inserted there, you would have received a negative mark. Okay? Then we move on to October. October, we have 132,800. It means then the month after October would have been November. So therefore, this figure here is our 75%. Therefore, the month after November would have been December, and then December would have been the 25% that you see here. So we have to take the entire credit purchases, which is 132, we multiply it by 25, which is what we want, over 100. Then we get an amount of 33,200, sorry. And then in November, we would use this existing amount. Like I said, we transfer it from the previous question over here into our creditors payment schedule. The amount is 137,600. We will have to take that amount because that amount is for November's credit purchases, and we are told that we don't pay within the month of November. If we buy in November, we only pay the following month. Therefore, in the month of December, that will be the following month. Therefore, this entire 137,600 that you see here, we will have to multiply by 75 over 100 to get the 75% of the total purchases. However, we were told earlier on, if we paid in that way as a business, we automatically qualify for a 3% discount. Therefore, you would have also had to multiply it by 97 over 100 to get our total amount of 104 to get those 2 marks that you see there. And then at the end, you have to take the 33,000 that you see here, 200, and you have to add the 104 to get the 133,304 at the. Okay, grade 12, here's another question. You were asked to calculate the following amounts, the rent expense for December, and the information that you would need to calculate that would be the following. The rent expense, it states here, will increase by 6% for the month of December, okay? And here you were given the November 2024 rent expense, which is 29,000. Therefore, here it's simple. You just simply take the 29,000, you multiply it by 106 over 100, you get the what? The 30,740. Why do I say 106? It means you take the existing rent over 100%, which is November, you then add the 6%, therefore then also you divide it by 100, you get 30,740. Next question. Interest on the loan for December 2024, you also asked to calculate it. information that's important here, part of the loan from Diamond Bank will be repaid or paid on the 1st of December 2024. You are also told here that interest at 14% per year is paid at the end of each month. Interest is not capitalized. Then you are given the interest on the loan for November as 3,500. Number 2 is what we have to calculate, and you're also given what payment will be done in the month of December on the loan. So for us to get the final answer, you would take the existing interest of November, 3,500 Rand, then you have to subtract what the interest will be reducing by, which is 700 Rand. And how do we get the 700 Rand? We take that payment that we have to pay in the month of December, multiplied by the percentage of interest, multiplied by 1/12, because it will only be for 1 month where the 60,000 Rand will be paid. Therefore, we have to minus 700 Rand, and we get 2,800 Rand. Now, very important, because the total loan amount will decrease, the interest for the month of December will also decrease, and you can't have an amount that's more than 3,500 Rand. Another popular question, the deposit to be paid on the 30th of November for the new computers installed, you must calculate. Here you are told that 20% of the cash deposit must be paid on the 30th of November, and the balance of these purchases will be then repaid in 36 equal monthly installments starting at the end of December. You were given here 9,800 Rand, which is the installment for the new computers. So simply you have to take that 9,800 Rand and multiply it by 36 to get the total payments, which will represent the 80%. What are we looking for? The deposit. And you were told then the deposit was 20%, and you get an amount of 88,200 Rand. Another question that is being asked is the insurance for December 2024. And you are given here the current monthly insurance premium on the existing computers is 4,500 Rand. The monthly insurance will increase by 28% on the 1st of December. But the company doesn't pay 4,500 Rand in total. They pay 17,500 Rand for insurance. And you are asked to calculate the total insurance for the month of December. Therefore, we have to use the existing insurance and determine what will the insurance increase by, which is 28% on that existing 4,500 Rand. Therefore, your total will be 18,760. And the next question, number 5, you have to calculate the salaries for the month of November. Now, this is an interesting question because here you are given the December salary. So you have to work backwards to the month of November. The additional information that they're giving you is that the company has 9 employees who earn the same monthly salary. Out of that 9, 5 of the employees will receive a bonus of 70% of their normal monthly salary during the month of December. So this 143 that you see here, it's the monthly salary of all the 9 workers plus the bonus of 5 of those workers, which is 70% of their normal monthly salary. So how do we calculate this one? You take the salary that we have, which is 1,437.50, you multiply it by 900 over 1,250, you get 103,500. Why 900? Because we have 9 workers who are all earning 100%, meaning the same salary. And then you have to add also 5 times 70, which is the bonus. So when we add those two together, we get 1,250, which is here at the bottom of our fraction, and then 900 will go at the top because we want to know what was the salary of all these 9 workers without a bonus, which gave us an amount of 103,500 Rand. And your answer here, very important, must be less than 143 because November does not include our bonus. Also, guys, very important, this question likes to crop up where you are asked to comment on the control. Very important, over delivery expenses, packing material. It can even be advertising as well, right? Here you are given information. You are given the budgeted figures with the actual figures. So you are asked to control over delivery and packing material. Now, like I said previously, you have to compare it with your sales, okay? And for the comment for delivery expenses, you have to go and calculate what percentage for delivery expenses that we actually plan or budget. When it comes to delivery expenses, you will notice here, we planned to spend 15%. And when we compare with our actual figures, with our actual sales, you will notice here it's still at 15%. Hence, you can say that it's well controlled because we budgeted 15% of sales and we actually spend 15% on sales. But now when it comes to packing material, you will notice here that we have 14,400. Again, you compare that with our sales. You will notice that we planned to spend 9%, but we actually spent 12%. Hence, now your comment will be not well controlled. We have budgeted 9% of sales, but we actually spent 12% on sales. Why do we compare it with sales? Because remember, when you are selling, you will have delivery expenses because you have to deliver those items to customers. Also, when you are selling to customers goods normally, you will have to package it. Hence, you have to compare it with sales. You can't compare it with cash sales only or with credit sales only. You have to compare it with what? Both the cash and credit sales, because whether a customer buys on credit or cash, all of these expenses will still be applicable. Just to wrap up grade 12s, important tips when it comes to this question, you need to do regular exam type questions on this topic. It counts for many marks in the trial and final exam. It was not in your June examination. Therefore, it is very, very important. The marks that's normally given for this question is between 35 and 45 marks, so you can see it's very important. It is also a guaranteed question in your examination. Unlike fixed assets and VAT, this question is a guaranteed question. It will definitely be there. Budget is only also assessed in paper 2, so you will not find in paper 1. And remember, in accounting, we do not have a choice question. All our questions are compulsory. We have come to the end of our lesson, grade 12s. You can leave your questions on the comment section. Don't forget to leave the name of your school so we can give you a shout out. Please share, recommend, and subscribe to our YouTube channel. Thank you for watching and see you on our next lesson. Goodbye.